Hello, everyone. Thank you all for being here. So the BTCFi space is a huge opportunity for the space. Imagine we can unlock $1.5 trillion in Bitcoin and make this value flow into DeFi. That's what these pioneers I have here on this panel are working on today. So if you would like to all introduce yourselves and tell us a bit more about what you're working on at this point.
Sure. I can go first. Good to meet you guys. My name is Dae Lee. I'm with dlcBTC. I'm focusing on wrapping Bitcoin using your self-custody wallet. We face institutional clients all over the world, and we're using technology called Taproot and discrete log contract to wrap your own BTC.
Hi, everyone. I'm Kyle. I represent, as Executive Director, the Stacks Asia Foundation. That is for the Stacks blockchain. For those who may not be aware, we were one of the original Bitcoin layers and the very first to bring programmability and smart contracts to Bitcoin. And as of yesterday, we became the very fastest Bitcoin layer to exist within the Bitcoin ecosystem, bringing transaction speeds from over 10 plus minutes down to sub-seconds as well. I'm also an advising partner to Bitcoin Frontier Fund, who continues to invest and be one of the largest investors in building on Bitcoin-based projects. Thank you.
Nice to meet you guys. Matt Donovan, head of BD at Lombard. Lombard is the top Bitcoin liquid staking protocol by both TVL and DeFi liquidity. We have a flagship product, LBTC. This is liquid Bitcoin. It is a tokenized representation of BTC that is staked into Babylon. We launched about 2-3 months ago, around $750 million worth of TVL into the protocol to date. This is all through native Bitcoin, and around 500 million of that has been deployed across DeFi.
Hi, everyone. My name is Jing. I guess firstly, before I go into detail, I'd like to thank our host, Chainlink, today. I think it's been a very, very good event so far, very, very well ran. So thanks for you guys. Beyond that, I think at Solv, what we're building is the concept of staking abstraction, where we look to bring Bitcoin and Bitcoin holders into the ecosystem, and then from there, how to actually work with them to generate returns and to generate yield. Over the last 6 months to 1 year, I think it's a pretty good product market fit we have found. As of yesterday, I think we are somewhere close to about 1.9 to 2 billion in assets, and definitely hoping to grow further.
Awesome. Thank you, and great to have you all here. Now, I'm very curious to hear from you guys. What do you think has been driving the interest for BTCFi? It's a very new industry. So many new projects are currently popping up. You folks are leading the way. What's driving this interest right now? And you guys can go in whichever order you prefer.
Sure, maybe I can go first.
Absolutely.
I think ever since BlackRock listed ETF, there's a huge interest in investing in Bitcoin. So I think it actually did a lot of education to the public, but at the same time, in the digital asset world, people want to do more on DeFi, but the only option they had was using WBTC. But because Bitcoin now has Taproot and other technologies that has been added for the last 3 years, ever since the bear market, so I think there are more options that we can offer as an ecosystem and as Bitcoin ecosystem world. So it just opened up a lot of doors and opportunities. Yeah.
I'll maybe take a step back, provide a little context to maybe how we all got here on stage and why we can talk about this subject. So when we look at the idea and concept of building on Bitcoin, it's easy to understand it in 3 eras. So the first is the first 12 years. That was from the foundation of 2009 all the way to the beginning of 2021. And that was a very foundational first 12 years for Bitcoin as an ecosystem. We saw not only Bitcoin launch, but we also saw the very first NFTs, real world assets, and DeFi when it came to this entire industry that we have of Web3. We also saw the beginnings of Bitcoin layers and what was potential in bringing life to Bitcoin as a network. During that time, you saw a lot of very much excitement around Bitcoin as a store of value and its proof around that as an asset. But then we moved into the second era, and that has been from 2021 all the way till today here in 2024, and that is the experimental era. That is when smart contracts, that is when Bitcoin DeFi, that is when NFTs, marketplaces, e-commerce, and staking, restaking, and all the narratives you're going to hear about today or otherwise you're hearing now. And that's also driven a lot of additional institutional interest, thanks to not only the ETFs, but also the legitimacy that led into this next era we're heading into. And that is actually seeing utility. And that all of these pieces together drive us towards Bitcoin as an asset becoming usable, that it actually has utility on top of it and an ability to earn, borrow, lend, yield, and so much more. So we saw the beginnings of DeFi early in that first era. Ethereum and many other ecosystems brought us what was potential with DeFi summer as Bitcoin itself was going through its experimental phase. And that, along with this institutional capital and the developers and builders that I sit on stage with today, have helped drive us into what now is becoming this trillion-dollar opportunity.
Yeah, for me, and maybe I'll just narrow the scope there. For us, it's been Babylon, right? Babylon in the last 2 or 3 months has actually onboarded Bitcoin from a staking standpoint, where 1% of the entire supply of Bitcoin, whether folks know it or not, has actually been staked. So this is actually quite significant, and Lombard comes into play here, where we basically sit on top of Babylon. And we're a nice go-to-market and distribution arm, and really a channel partner for Babylon, where we will continue to enable folks who hold BTC, which has been such an idle asset for the longest time, to now gain actual exposure to the Bitcoin staking rate. I think it's still a bit TBD of what that actually looks like, but in a very short order, we've proved that people want to do something with their Bitcoin. There's, of course, this technical element to this, where there's BitVM and Opcat and other technical innovations that are pushing forward BTCFi, but then there are the actual use cases, right? There's staking, there's stablecoins, there's payments, there's a number of different types of use cases, but I think overall, all we're really seeing is Bitcoin is moving from this store of value, digital gold, into a number of different use cases, and staking, for at least us, being a main driver of all this interest.
So I think many of the panelists we have brought up many good points. And if we rewind, maybe not as far as Kyle, but like rewind to maybe 6 to 12 months ago, right? Like the first usage of Bitcoin on chain and Bitcoin DeFi really started with your ordinals, your BRC20s, and that's really the first wave. And then as you evolve into Bitcoin layer 2s, you evolve into the various chains, you start to see Bitcoin being a staple in DeFi, beyond just WBTC, on how you can actually use it on lending, on staking, on DEXs and everything, right? And that's how we really have been evolving. But then even if we take a step back and look outside crypto, right? Like a lot of the things we're talking about is how do you use BTC and crypto and everything within DeFi. But then if you look at it outside, like topics of inflation become very real, where people want to hold many of these assets, right? Why? Because local currencies have issues. They want to hold stable coins, they want to hold Bitcoins. And so if you really look at it beyond just what we are doing and what we are building, like it's a much bigger story, it's a much much bigger use case, and it's a much bigger narrative.
Perfect. I think this all makes a ton of sense. What I can see here is that the journey Bitcoin is on right now is very similar to the journey ETH was on a few years ago. Mm-hmm. DeFi actually brought utility to ETH, right? Now if you're holding ETH, you can lend it, you can borrow, you can stake, you can do so many things. I think what you're seeing today with Bitcoin is the start of this. But the great thing is that you can learn from the experiment that the Ethereum ecosystem had, right? The DeFi ecosystem. So now we're going from a place of knowledge instead of going from a place of discovery. So I really look forward to see how this all shapes up. Now, we have 2 ecosystems today, right? We have the DeFi ecosystem that's mainly built on EVM chains, and we have the Bitcoin ecosystem. What are the key pieces you need of infrastructure in order to connect these 2 ecosystems together? How do you bridge those 2? Very keen to hear your thoughts here, and again, whichever order you prefer.
I actually want to comment on the point you just made is, from a Bitcoin ecosystem side, we're able to look to history to build on top of, and that's something that sometimes maybe we take for granted and or we forget very quickly. Because to Jing's point, the majority of the development and things we're talking about here on stage have publicly been out in the market in less than a year. The amount of development that has happened in 10 months, and I'll be generous and say 12 months, post Ordinals, which was almost 2 years ago now, has been faster than we've seen in this entire industry in 15 years. The amount of growth that we've had on the Bitcoin ecosystem side has more than 7x'd year to date. The amount of capital from an asset point that was brought up earlier, Bitcoin's ecosystem, its total worth from a smart contract standpoint, so we'll just sum it up as its TVL, in December of last year was around $300 million. If we look at that today and what is happening in terms of TVL and smart contract activity around the greater Bitcoin ecosystem and layers, you're looking at $2.5 billion. That's a 7x gain that we've seen in just a short amount of time as well. So I think that's something we need to take into account when we look at this ecosystem, and the opportunity is how fast all of this development has come from. And then to your second question, when it comes to bridging these two worlds, we're already seeing that at scale right now. You've got the EVM world, which was able to take a lot of that foundation for Ethereum and just keep pushing it forward, evolve it, if anything. And then you've got some networks that are focusing more on the native side as well. And I think we're going to come to a convergence here in 2025 where those worlds do connect, thanks to some of the efforts on my right here, both with Lombard and with Solv, working with so many of the protocols to help bring them together in one world and not battle against this. Because the one thing at the end of the day, we've got $1.5 trillion of Bitcoin capital sitting out there. We can all fight for it, but right now there is no reason to fight for it. Instead, being able to work together interoperable, which is at the end of the day what users want. We can talk very technical and speak about our individual ecosystems and protocols, but users from a real world example, it will not matter. They want to be able to move assets from A to B and be able to do C with it. And so right now, there is a lot of development happening separate, and they're slowly starting to converge because at the end of the day, they'll have to in some capacity.
Yeah, look, I think you need institutional grade infrastructure, right? And that's why we're very excited to be partnered with Chainlink across a host of different services, whether that is price feeds, whether that is proof of reserves, whether that is CCIP. If we are going to build this for the long haul, we need really smart and intelligent and established partners. And I think Chainlink providing that suite from a platform standpoint is exactly why we've partnered with you guys. Beyond that, from an infrastructure perspective, you need a global approach and a very secure approach from a custody standpoint. And that is something that on the Lombard front, we're continuing to build out day by day. And so those are probably the two main focuses for us. But I think in reality, what continues to excite us is, you're right, there is a playbook that has already played out in the form of Ethereum staking. You look at Lido, what they've done with STETH. This has become a blue chip DeFi primitive across all of DeFi. If you can do this where you're now considering a 3-4 times size of the asset within Bitcoin and do that across all of DeFi, I think that is quite significant. But you can't do that unless you have a secure and institutional grade approach to all of your infrastructure. And again, which is why we're pretty excited about where we've landed with Chainlink across the suite of services, and along with the branding that comes with that, quite frankly, because there is an element of trust here. And for that reason, we want to be building with the best, both on the DeFi blue chip protocol side of things, as well as access into institutions. We want to be building where the best players are, period, and which is why we're quite happy with where we've landed with Chainlink across the platform.
Thank you. Any thoughts?
Yeah, just to add on the native Bitcoin side, we're using what we call Taproot discrete log contract. It's kind of smart contract feature on Bitcoin. And even though this was added 3 years ago, there weren't too much of utilization of the technology until now. So I think native Bitcoin side, we can explore more. A lot of developers working on Bitcoin network at this time. And I think it's continuously going to evolve. But utilizing native Bitcoin has been a very interesting journey for us.
So I think many of the panelists already brought up many good points. I think where I would like to highlight a few things. Users probably wouldn't pick a chain because it's ETH aligned or because it's Bitcoin aligned, in my view, for majority of the users. They will pick a chain because it's a good user experience. It's easy to access. It's good to use, right? I think those will probably be top of mind. Obviously, security, decentralization, and all this matters. But so, like what Johann said, over time, and what Kyle said as well, over time, a lot of these are going to converge. less so about whether it's an ETH chain, a BTC chain, a Cosmos chain. It's going to be the chain that users like, right? So, and that's how we really see it. How do you build on the chain? How do you build on DeFi with quality teams, with blue chip teams, and blue chip partners, right? At the end of the day, what we're looking to do is to scale it and to build it and to make it more accessible for everyone.
Perfect. I think this all makes sense. From my point of view, one of the main benefits you have with this BTCFi adoption is that we can make it run on standards. Because we've seen how Ethereum and the DeFi ecosystem shaped up, we now understand what a token standard can look like. From our point of view, it's very simple. You have 3 steps to a token standard. You need to be able to mint it safely with proof of reserve. You need to be able to get it across any chain you need to access with cross-chain CCIP. And then you need to be able to get it into DeFi through something like data feeds. And I think over time, when you look at standards and how an industry can accelerate by building on stable foundation, you cannot underestimate the acceleration you get by building into a standard. So I think that's what we're all doing here, and that's what makes me very excited about the growth of this space. I'm confident that if we build on stable foundation, this space will be billions and billions in the coming months. Now, I have a question which I'm quite curious about here. Bitcoin has shifted vision. I would say at the start of the Bitcoin space, Bitcoin was meant to be digital cash, right? Progressively, it started shifting more towards a vision over digital gold. I think the BTCFi space actually has the opportunity to adapt the vision around Bitcoin being used as a financial infrastructure. I'm very keen to understand how you see this vision actually progressing in the future and what role BTCFi will play in shaping up this path.
I'll start. Everyone's kind of shifting their eyes towards me. So in terms of that vision shifting from a store of value to a more flourishing financial ecosystem, we've got a few things that have to happen and a few things that are happening. In terms of what is happening right now, that infrastructure has continued to grow and improve. I think we've talked about that at this point. 2, security is something that, or excuse me, standards is something that's being worked on. And to be very clear, and I'll be the bad guy on the stage here. Right now, on the Bitcoin side, we don't have standards yet. Outside of BTC itself, we do not have token standards. We have experiments. As I noted, this development cycle is outside publicly just under a year. There's much more work that has been done, but we're all trying to figure out what will be that standard. And a good example of that is the battle that we saw between Runes and BRC20. And BRC20, in the beginning of this year, was going to be the next standard. It was going to rival what was existing in ERC. And then very quickly, Runes was going to come up. And all of a sudden, Runes was going to be it. And very quickly, we went from 1 to 12 to maybe back down to 1 in a very big clouded area of standards. So a lot of this right now is experimentation. But what we're all working up on here, and myself and 2 others, so we're 3 of the 21 different assets that have emerged that are now tokenized Bitcoin, that are allowing Bitcoin to start moving from the L1 onto a layer and into the application side of this ecosystem. That takes things from a store of value to a truly financial ecosystem in some capacity. Whether that's dlcBTC, that's SOLV, BTC, that's SBTC, or again, 18 other assets, we're starting to see that emerge. That's being accelerated with some of the recent changes with WBTC and its proposals, as we're seeing TBTC and others start to thrive in a way that has usability, that does have use cases, that does have users. But at the end of the day, while this is all being talked about, there's 2 very important things that have to happen for this to even be successful beyond a conversation here on stage. And first and foremost, that's security. From a security standpoint, when it comes to the world of BTC, we have one shot. We cannot have, back to your point about looking at Ethereum and the ecosystem that was, we have one shot. We cannot have what has happened in the past happen again. We cannot see leakage. We cannot see breaks of billions of dollars. back to the point made around institutional capital. Once institutional capital sees $1 billion lost, the financial ecosystem that we're talking about is done. And so security becomes a very big component of what will be a Bitcoin ecosystem going forward. And the last is mindset. Going from a store of value to a financial ecosystem, that is a mind change that we need to make. Being able to use your BTC, borrow, lend, yield, earn, and engage with it in some way, that is something that 46.5 million unique wallets and individuals that exist today in this ecosystem have to go through. And that's how we go from 46 to 100, and from 100 to 500, and 500 to 1 billion users in this ecosystem.
I mean, I think Kyle brought up many good points. I mean, we have been on many panels together, and I think I share many of our similar thoughts with him. I think at the end of the day, what do you mean by financial infrastructure in this case, right? How do you really get to that point? It's both going to be a use case, and both is going to be a vision, right? Like BTC right now and historically has always been an asset you hold in your wallet, you hold in centralized exchanges, and end of story. Now it's about how do you use it beyond that, right? How do you use it in various contracts? How do you use it in various places? Bitcoin largely is a series of trust assumptions right now, right? On onchain, we work with partners like yourself at Chainlink, using either the oracles, using your bridges and stuff. It's all about trust assumptions and who do we want to work with and who do we trust, right? I was looking at the stats yesterday, and funnily enough, I think on the average for CCIP, we're probably more than 50% of your daily bridging volume. And I think what that shows is that our users trust your bridge. Our users trust the CCIP technology, right? And that is a step. That's a trust assumption. But these are many small steps that users need to take, that we need to take to get to the next point. And then increasingly, you start to see Bitcoin and BTC not sitting in your traditional crypto wallets or your crypto holders. You're going to see it in your family offices, your institutions, and increasingly your ETFs. How do you get these assets into this space that we are building? Because you don't want them to stay out there. You want them to get involved. And all these things that we're discussing, those are baby steps to get them here, right? So that's what we are really working towards. That's really the long-term plan.
Yeah, and I think to some degree, the cart is a little bit before the horse with regard to this whole BTCFi push. For us, we've found a lot of value in this concept of Bitcoin staking, again, which has been pioneered by Babylon through 2 different protocols that they've launched, which is the timestamping protocol and the actual staking protocol itself. We've gotten a ton of value out of this. Again, we have proven the fact that people want to do something with their Bitcoin, where we've onboarded about $750 million worth of BTC into Lombard. Again, folks who are minting LBTC, this liquid Bitcoin asset, are deploying that across DeFi, where $500 million worth of capital is deployed across these extended DeFi strategies, where we have 25 plus different integrations that have been stood up. So I think there is a use case here, and for us, that comes in the form of staking. But I do think we need to tread lightly, and we need to be very, we need to move carefully and responsibly. Maybe not all of us have a fiduciary responsibility, but I do think we need to act that way, because I agree. To some extent, we only have one opportunity here, where you're taking the largest crypto asset by market cap far and away and providing more programmable features to that. That comes at a cost. And if you're not doing proper audits, if you don't have things like proof of reserves and very clear security measures as it relates to cross-chain expansion, you're dead on sight. And so for us, what we want to continue to do is align ourselves with those who have a similar mindset, have this institutional grade infrastructure approach to building, and that's exactly what we're doing.
What's really exciting about that too, I mean, you look at Bitcoin right now, $1.5 trillion. All of our efforts and those that are here building on Bitcoin, everything works. We provide utility to Bitcoin today. That means today, $1.5 trillion economy turns on instantly. None of us in this room, audience or on stage, have ever seen that happen instantly. That $1.5 trillion ecosystem turns on, is fully active and ready to go instantly. That is the responsibility and mindset we need to have as builders, and the responsibility that we need to take when we look to how we engage with our users, because that $1.5 trillion economy will hopefully go to 2 trillion, to 5 trillion, to 10 trillion. And that is something we need to be very thoughtful about as well.
But again, I do think it comes down to the use case, right? And in a world where TradFi runs on yield-bearing assets, retail is starting to expect and maybe even start to demand access to yield-bearing assets, this concept of staking is playing out in real time. You're seeing that within Ethereum. You're seeing that within Solana. Van Eck just launched a Solana staking ETN across Europe. This is happening. And so if we can take these concepts that have been playing out across Ethereum, across Solana, across BNB chain, and apply it to Bitcoin, of course doing it in a fully secured way, this will take time. But the opportunity here is quite massive and is exactly why we're very comfortable to be in this position across Lombard, where we're pioneering the idea of Bitcoin staking via the likes of Babylon.
Yeah, I mean, I agree with all you guys about building the right infrastructure, having the right custody, and making sure the infrastructure is all set up before everybody jumps in. And also, I think it comes down to education. Like, what risk level are you willing to take on, yield generation opportunities? So I think it's all fine balance of what you're willing to risk and also what you're willing to do.
Okay, this is all super, super exciting, and I do agree with your point around security. Let's say everything works out. Let's say we provide a fully secure standard for BTCFi to actually grow. Where do you think this whole industry will be in a year from now?
Yeah, I can go. I think any.
I didn't want to be first.
Yeah, sure. I think any.
Everyone is too polite on this panel.
Yeah.
That's good.
I think a year from now on, any institutions that are heavily invested in ETF or any Bitcoin reserves, just like MicroStrategies, they'll have another opportunity to generate yield, not just holding Bitcoin. That involves a lot of work, compliance, legal, and it's going to take a lot of paperwork to get there. But I'm very hopeful that that's going to happen because we do have a lot of interesting plays that's happening right now, right? When companies are holding Bitcoin as treasury balance, like imagine what else they can do when they're doing that. So I think BitcoinFi allows that to happen. In terms of the retail, imagine if you're holding a ledger, like Bitcoin in your ledger, just plug in and generate yield, either using any of these platforms out there. So I think 1 year from now, that's like, I think that benchmark is pretty low, but I'm pretty optimistic that we can do more.
Just want to see two things. I want to see 46.5 million unique wallets, more than double. I want to see us push towards 150 million unique wallets 1 year from now. And second, L1 integrations, that our respected assets and protocols are cross-chain with other L1s, whether that's Aptos, Sui, or others. I want to see all of us being able to support those ecosystems, provide users a way to move and interact with their Bitcoin in the respected ways and ecosystems they choose.
I would say at least 10% of Bitcoin liquidity and market cap has access to DeFi. And on the Lombard front, what we're going to continue to do is provide additional paths through distribution. We have this staking SDK. It's been quite attractive for different wallets, exchanges, UIs, UXs. As I mentioned, we're gearing up for a massive institutional push. So where we'll be in a year exactly, I am not sure. But for us, we're just going to continue to building and partnering with the right folks to make sure that at the end of the day, we're doing this in the most institutional, great approach. Because I do agree, if we get this wrong, there's really not too much coming back from this as it relates to all the different things that have gone wrong within crypto. So there's a ton of responsibility to be doing this in the right way and with the right partners.
I think at the end of the day, how you're going to measure success on this thing is really about adoption, right? How do you get more users in? How do you define users? Your mom and pop on the streets, your institutions, your ETFs. I think at the end of the day, every little bit matters, right? It's not about just me playing against you and you playing against me. It's how do you get incremental assets, incremental interest, incremental users in it? I think that's really the benchmark and that's really the goal. From an institutional side, like you said, it's about quality institutional grade assets. From a retail side, it's about how do you make the user experience much easier to get it. Crypto as an asset, crypto as a front end is 10 steps backwards when compared to Web 2. Right? How do you make all these things so much easier for people to use and to get in? I think that's really the next steps for us.
Perfect. Well, I agree with everything here. Thank you very much for this panel. I think it was a very good session. I also want to thank you for the partnership. We're all working together on something that could be the next big unlock for DeFi and for our space. Trillions and trillions of dollars flowing into DeFi through what we're building here. So if we get it right, we could literally change the space in 1 year. Thank you very much, and thank you everyone for coming.